Good morning, everyone, and welcome to another edition of Bleeding Crypto's Market Update. Today is Thursday, March 6th, 6:32 a.m. local time. I hope you're having a good day, morning, or afternoon, depending on where you are in the world. Let me start off by giving my disclaimer. I am not a financial advisor, and this is not financial advice. This is to be used for entertainment purposes only for your fantasy paper trading. All right, guys. So, we are going to look at the market, and we're gonna look at a couple different charts, because yesterday I told you guys that I will follow up today on the charts. So there's two charts that we were looking at. There was three of them, but we'll look at all three of them, and then we'll see what we've done. Let's do this one here. This is the projection that I told you about that I had 3 days ago with my team, with both my Discord and my Telegram channel. Remember, guys, if you're interested in joining either one, just send me a DM and I'll give you a link to each one of those. One is an educational one. It's $100 a month, and one is just targets, Cliff Notes, which is $25 a month. You guys get the end of the discussion, the projection of what we're looking at, but you don't understand why we're getting there. In my Discord, I explain why. And I look, well, better said this way. I don't know what's going to happen, but we look at the probabilities and I explain why I believe it's going to happen based on the data that I'm looking at. Is it 100% accurate? No, it's not. It's based on probability. So I guess that's how you can differentiate both groups. The $100 one is the educational one. The $25 one is the Cliff Notes, the end result of that discussion. So this is what you're also getting. You're getting the end note of that discussion, and the end notes is 3 days ago we mapped this out. We mapped this scenario out here. Yesterday, I had two of them, scenario number one, scenario number two. I removed scenario number two because scenario number two called for a dip to here before the bounce. We didn't get that. So I want to clean up the charts just a little bit. But we're still slowly but surely working our way up to here. Now, could we get invalidated and drop from here? Yes, we could. And we talked about that yesterday. When we had the video yesterday, I believe we were, let me see here. What's this here? This was the 5th, 5 o'clock in the morning. I think I did it I think I did it between here. I think we're somewhere in here, and we had talked about the possibility that this may be a lower high. So we went on a different chart, and I showed you a lower high rule. So let's go to that now. Here it is. So let me just turn off the EMAs. Okay, perfect. So we talked about the bigger move, the bigger harmonic move was going to be this. This is the daily macro move. That daily macro move, if you recall, gets us to this possible bull trap area that I'm looking for. Possible, not guaranteed, possible. But this here was the lower high rule that I told you guys. Yesterday, we were right at 618. We can go all the way up here. As long as we don't close above here and invalidate it, this is still valid. Look at what we did here. Let me zoom in so you guys can see and can appreciate why I like to use Fibonacci, these Fibonacci tools. Give me 1 second. Let me move this over. Okay. I want you to see the respect that the price action has on these. And if you're wondering, well, how does that happen? That's because the algos that trade against us are programmed based on these Fibonacci tools. So when you utilize them on your TA, it becomes a little bit more simpler a little bit easier to not predict, but to understand where things may stop, may get respected, may pivot, may bottom, may top. That's all it does. And look at this. Look at this. Right at 786, little deviation above it. We didn't close, so we validated the lower high rule. Okay, we got a lower high, but it's not a confirmed lower high. A confirmed lower high is going to be when we put in a lower low. Because remember, this is our target. Within here, we're not going to see a straight candle that goes there. We're going to see a lot of volatility, a lot of stair stepping. But as long as we're putting in on the smaller time frame, higher low, higher low, higher low, higher high, higher low, higher high, we're still working our way up into that macro. This is just a measured area that if we're not going to go there, it would make sense to pivot here. Trading isn't easy, guys. Technicals aren't easy because often what happens when you look at these technicals, you're trying to create a story around your bias, and that becomes very difficult for you to see the data clearly. for you to be objective. So when you look at this data, you have to understand that your bias or your motivation shouldn't come into play, and it doesn't matter because it's what you have to be truthful to yourself what the data is showing you. The data just showed me that that we have a lower high, but it isn't confirmed until we go down here. So what could happen here? What does all this mean? Look where we bounced, right on 618. Look at this. Resistance, better said, at resistance at 618. What do? We flipped it, we came back, and we confirmed it. Is that bearish? Not to me. But what about the lower high roll? Yeah, well, we did respect it, but we haven't confirmed anything. So why would we hold ourselves to think, well, we have to go down because we met all the rules of the higher low? No, that's not how it works. You have to allow the market to completely validate it, invalidate it. Yes, one part of the lower high rule is there, but it doesn't mean that it has to play out. Because what could happen in this here, in this type of bounce, is, you know what? Look, we've had a bounce, but we still have room for a higher low to get us into our higher high for the ultimate target, which is the macro harmonic pattern. So let me tell you what that would look like. You take the bottom of this bounce, top of this bounce, right here. So we could actually go to 87,205, come down and put a higher low against this higher low. And guess what? We continue to move up. The whole object of this harmonic pattern is to go to this point, okay? As we're going to this point, we want to do everything we can to get up here without breaking the bottom of this point. So the only thing that really matters in this entire structure is this point right here, which is 81,500 to the penny. All right, that's the one right there. Everything above that, it's part of the journey to get to here. And that journey is not going to be easy. That journey is going to be difficult. And that's the journey from here to here that's going to drive you crazy. Because you're going to keep on trying to guess how that journey is going to be played out, and you don't know. Why? Because there's a bunch of detours. You think that it's going to happen. One road is going to take you there. That road is closed. You got to take a detour. You have potholes. You got your car breaks down. You get it fixed, and it breaks down. Like it's like a road trip, from hell. And you have to adjust, and you have to understand. You have to identify. You have to look at markers. So like this continuation rule. This continuation rule, all it does is helps me to understand that if I hit the lower high rule, but yet we come down and we bounce off 382 or 0.50, that could very well possibly just be a higher low within that journey to get us up here. If we don't respect this and we break below here, then this starts to have more strength, more conviction that it is a lower high. And once we cross 81,500, I can look back and say, yep, that was it. There was a marker. There was that doji. There was that candle. There was the respect of the fib. Here's the confirmation. And nothing has changed. We're still in the downtrend. And that's how you need to approach the TA, how to approach what the market's trying to tell you, rather than just thinking that, no, your plan has to work out. No, you have to have alternates to your plan. You have to understand what these pullbacks mean, what they do, because a lot of these pullbacks are just ways to liquidate the contracts that people are opening on the way up. See, I approach the market not only with the data, with the TA, but I also approach what motivates the market makers to not go straight up. Think about this. People often think, well, if you go up here, everything's going to be worth more. Why wouldn't you do that? Because the market makers have an opportunity to make so much more money than to throw this straight up. And let me give you an example of that. The market was moving nicely here. But you know what happened? You have all these people down here really greedy. I'm going to 100x this. I'm going to put $100 million and I'm going to make so much money. And the market maker says, no, you know what? Slow your roll. I'm not paying you. So what do? They calm down. They knock out those contracts. Once they knock down enough, they continue their journey. And I'm gonna give you an example of that. As we're going up here, so let me show the equivalent of this. Okay, as we hit here, this right here is equivalent to this right there. Okay, look below. You see these orange circles? These were 100x contracts. Look at this one right here. $138 million, 100x contract. Another one for 71 million, 100x contract. Not to mention all these other ones. But I'm focusing just on the 100x contracts. And then you have a third 100x contract for 83.26 million. And look what the price action did. They came out and took this one, and this one. And of course, they took out all these other ones. This 74 million. And here, let me zoom in so you can kind of see. Let me make it easy for you guys. Look. They took out this one as well. They took out this one as well. They took out this one as well. But these three right here, look, they came out and they took it. And they took it. And then look what happened. They took this contract. That's the bigger one. All right. Then it started to push up. And as soon as it started to push up, look at this beautiful W. Look at this beautiful W. As soon as it started to push up, somebody says, I'm going to sneak another contract in here. 56.42, 100x contract. Market says, nope, I don't think so. Says, nope, I don't think so. And then look what they end up doing. They end up going on to this one here. That is $138 million 50x contract. And they came and they took it out and they bounced right there. So they took out, there's three of them. These whales work in sets of threes. They have 100x, 50x here, and then you have this one down here for 25x. And they typically really like to go after those 100x, and those are the ones that I focus on. But often, not always, they go after the 50x as well, depending on the size of them. You still have that big contract I told you guys about. Look, 188 million up there. But they didn't want to pay these guys. They don't want to pay them. So when I look at data like that, maybe that'll help you to understand why I don't get overly bearish and overly bullish when our projection doesn't hit in an hour. It doesn't hit in 2 hours. It takes, oh my God, it took 3 days to go up there. What's wrong, BC? Why did it take so long? Well, why are you in a hurry? You don't control the market. The market makers control it. Why would they do it quickly? They can make hundreds of millions of dollars per day. Why are they? They're not in a hurry. You are. So they'll take their sweet ass time, and there's not even a guarantee that we're going to make it up here. That's the thing. Not even a guarantee. This is just this target is just based on prior moves that happen more often. Not happen every single time, but just more often. That's why it's not easy to do this. It's a probability game. But you also have to understand what those probabilities are based on those. Look, if this is falling here, guys, and you didn't have the data that I have, how are you going to? What I mean, I would be in your shoes right now. Oh, that's it. It's over. It's over. Well, not quite. Not quite. There's 88,500. We can bounce from here or here, put a higher low. Why would they come all the way down here? Well, then I just jump into here. I start looking at some of those contracts. What is here? Let's do this. I'm gonna show you guys something. I don't normally show you this, but I'm gonna show you this right here. 87,205. Can I make a case why it can go there? Is there any big contracts in that area that would motivate the market makers to come here, grab all this liquidity up to 87,200 and then continue to move? Let's see. Let me zoom in here. And let's see. I don't know. I don't control this market. Let's see. Look at this one here. 138 million. That's the other contract at 87,994. Could that be a good motivator? I would say so. That's this contract right here. What about this contract right here? $124 million. And this was at 87,021. Let's see. 87, right there. Right there. That's right there. here. I'm gonna actually leave this for today's show. I'm leaving this on here. Let me get the exact number. I'm gonna leave it on here because tomorrow we're going to revisit 124 million, 124 million 021, 124 million 021, 124 million 021, 124 million, 124 million, contract. Okay, perfect. We're gonna do it. I'm gonna end the show here. Doesn't mean we're gonna go here. It just means that if it does, we have a better understanding of why we came here. It makes more sense. Oh yeah, and between here and here, look at this. Look at this. Between here and the present price action, look at these contracts: $60 million, $90 million, $53 million, $59 million, $56 million, $60 million, $83 million, $56 million contract, $52 million contract, $138 million contract. I mean, it goes on and on and on. So what? So you are a market maker and you would say, no, I don't need that money. I don't want that money. I'm just going to go straight up in one candle. Do you see how ridiculous that sounds? So that's why we're not going to go in the time frame that you want. We're going to go in the time frame that the market makers can benefit the most. And this is how I come up with those projections. So I'm going to do this for the foreseeable future. I don't know for how long, but for the foreseeable future, I'm going to come on here every day, and we're going to go to this data. And we're going to look at these types of moves, and we're going to see all of us live every single day, and we're going to see how accurate those moves are. And we're going to see how well these market makers actually hit those projections. Now, there's one more that I want to mark. It's that $138 million one, this one right here. Just give me 1 second. 138 million, 87,994, 87,994, 87,994, 87,994, 138 million contract. Okay, perfect. And I'll tell you why. I'll tell you why in a minute. Give me 1 second. I'll tell you why in a second. Okay, perfect. All right, we're gonna do that. Here's why I noted this contract. Those are the two of the bigger ones that are there. Okay, and like I said, from my experience, that's what they like to go after. And look at the location of those contracts, right next to each one of these key fib levels. And this is why I'm going to continue to do this for the foreseeable future, because you're going to look at this and say, oh, that's just a coincidence. Okay, when we see this every single time play out the same way, there's always these big contracts next to key fib levels. You'll stop thinking it's a coincidence, and you'll understand how programmed this market really is. It's trying to break that code that's difficult because they're changing the code, but you're going to see some familiar characteristics, and this is going to be one of them. 9 out of 10 times, these key fibs have big contracts around them. So that's going to help you to understand how these markets are moving. No guarantee we're going to come here. Look, we're holding 618. We're holding that prior resistance and support. This could be it. But I like to have a backup plan. If this fails, I'm not going to react. I'm not going to overreact, because I think this is a good, reasonable plan within a local time frame that could catch the price action, rather than thinking, oh, that's it. We hit the lower high and we have to be going down. We have to do it. No, we don't have to do anything. There's so much that can happen between here and never confirm a lower low. So every day for the foreseeable future, we're gonna take these one step at a time, and we're gonna see how well this played out. And there's only one other contract that I want to put on here, and that's the one above. That's this one right here. Ooh, there's a lot of them actually. Oh shit, never mind. There's a lot of them. But I'm going to put the higher one. So let me do this. Look at these. Again, here's another reasoning why I believe we're going to continue to go up. Look at the amount. You see these contracts that stick out? Look at the amount of look at the size of these contracts compared to these contracts. Look, the ones that are bigger than these are all of these right here. 188 million, 167 million, 181 million, 171, 162, 108. You don't think they want these? You don't think they want these either? What does that look like? Higher low, higher high, higher low, higher high within a low time frame type of move. So again, this may not make sense to you right now, but just wait. Every day I'm going to come on here and I'm going to show you this data, and we're going to go through this, and I am going to hopefully start sparking that interest. I'm going to hopefully start opening your eyes to the way the majority of this market is controlled by that data. And that data is what motivates the market makers to, why did you stop right here? Why'd you go all the way here? And when we go back, like I did a minute ago, and we look at all the contracts that move wiped out, you're like, wow, they made $300 million. They wiped out $300 million just on that little move right there. You'll understand, like, oh, shit, well, that makes sense. Shit, I would have done the same thing. It makes sense. And if you're asking, well, why don't they go all the way down here? Guys, these algos, they're much smarter than us. They can easily figure out what the payday is going to be on these contracts if they go all the way down here, and vice versa. They're going to calculate what the biggest risk and where the dollar amount is the most for them to capitalize. That's something beyond my pay grade, and I don't try to tend to know exactly which one of those contracts they're going to take out. I'm just going to look for the probability. The probability so far has been those contracts. And like I said, don't take my word for it. We're going to do this every day. And then you tell me after a week or two, and you start seeing the exact same patterns playing out, you'll be like, oh shit, that makes sense now. It didn't make sense in the beginning. Now it makes sense. Now the higher probability is going to be this one or this one. They don't have to take both of them out. They can just go to one and then bounce. I've seen that many times. You'll have two massive contracts, and they take the first one out. You're thinking, okay, here we go. There's no way they're going to leave this one. And guess what they do? They just go. Why? I don't know. Usually it's because there's bigger contracts up here, bigger fish to fry up here. But that's just my guess. Ultimately, I don't know, but I don't have to know the exact reason. I just have to have the probability of what those next moves are going to be. So, I didn't go up here. So there's actually too many contracts here. I'm going to do this locally. I'm going to go to this local contract. Actually, this one right here, this one has a higher, this one has a higher leverage at 95,326 for 181. 95,326. 95,326. 95,326. 95,326. For shit, what was that? 181 million. 181 mil contract. Okay, so let's do this. You saw between here and the top of here, look, this is 98,258. That's the end of that harmonic pattern, okay? Now, I chose this contract because it's one of the bigger ones that has a higher leverage than the other one. This is a 50x contract. But I'm just going to take the very last contract, which is this one right here. 171 million at 97,636. 97,636. 97,636. 97,636. 97,636. 97,636 for 171 million contract. Okay, so I'm gonna explain to you what I'm looking for. So I'm looking to see how greedy they are, and I want to see what the carrot is. What's the goal? What's the payout? What's the motivation? That's the best word to use. What's the motivation to go higher? This is just two of a dozen contracts that are up, a dozen big contracts that are up here. Okay, there's a dozen big contracts up. I just chose the two biggest ones. All right, so let's see how well that data, how accurate this data is. All right, and I'm going to do it every day. So we'll walk step by step on where it hits, where it pivots, and where it goes. All right, so we have a reason. We have we have a technical lower high. Now, if that technical lower high does not play out into a lower low, we're going to see what caused it to do that. Did we come here, grab those contracts, and then go up here and take those contracts? Then you'll know, like, this was our end goal, but we did drop from the lower high roll, but we invalidated the lower high roll. Well, once we have a full candle body open and close here, I'm going to take this off our chart. But I don't want to do that until that day comes, and we're going to study this contract, this move. We're gonna dissect this move in great detail in the next for the first. I don't want to give an exact time frame, but for the next at least 1 or 2 weeks, we're gonna dissect this so you can understand what I'm looking for. All right, guys, this video was actually sponsored by BitUnix. If you go to my profile on Twitter, you're going to see on my pinned post there is a link there to join. So if you want to join me there and join my copy trade there as well, I have a copy trade running on WeX and on BitUnix, so you can go to either one of those. And on the BitUnix, because it's a new partnership, they are offering quite a bit of bonuses as well. So if you want to take advantage of that, you guys can go ahead and do that. And I will have another recording for you guys tomorrow. Talk to you later.